It's 1:30 p.m. in Lagos, 12:30 p.m. in London, same time in Accra. We're bringing you markets, analysis, and insights right here on Business Incorporated on Channels Television. And here's what's coming up on the program. Nigeria's inflation continues its upward trend, rising to 27.3% in October. And global oil prices gain on Middle East tensions. And Kenya announces new fuel prices. Hello and welcome to the program. I'm Will Ibang. Let's kick off with major markets in Africa with equities in Nigeria. And they were trading with mostly positive sentiments. Let's see how Nigeria's NGX performed at intraday. It was up 0.16%. We see South Africa, though, massively down 2%, 2.01% to be precise. That's brutal at intraday. Let's see how EGX 30 in Egypt performed. 0.97%, that's nearly 1% up there. 24, it has crossed the 24,000 level there. And Kenya closed Tuesday's session in the green. Now let's see how Middle East markets performed at intraday. It was also mostly positive at intraday. But for them, let's see how the markets performed. Dubai was up, the Abu Dhabi, however, was up 0.13%. Dubai, on the flip side, was down more than about 0.5%. Let's see how Saudi and the Qatari indexes performed, 0.72% and 1.62% each. Not bad for intraday performance in the Middle East. Now, we see now in London, the Supreme Court in the UK has ruled against the government's plan to send asylum seekers to Rwanda. It's described this as unlawful. We're going to be talking to Juliana Olayinka there in London. Juliana, good afternoon. It's good to have you on the show.
Good afternoon, Will.
So this plan, this Supreme Court ruling, apparently is kind of a dampened the Prime Minister Rishi Sunak's plan, and also his plan to come in for a second term. This is not what they were expecting, was it, Juliana?
Oh, yeah, well, this is a huge headache for Prime Minister Rishi Sunak. In fact, he's currently in the House of Commons answering MPs' questions, Prime Minister's questions, and in any moment, the new Home Secretary, James Cleverly, is going to be reading a statement. We're then going to expect a televised address, I believe, from Prime Minister Rishi Sunak at number 10 Downing Street to address the public, because, of course, this is a major political subject for him. At the beginning of the year, one of the Prime Minister's 5 pledges was to stop the boats, and I think the symbolism of that stopping the boat pledge was for the British public to see illegal migrants being flown off in a plane to Rwanda, which the Supreme Court has unanimously agreed is an unsafe country. Now, of course, the Rwandan spokesperson, they've just released a statement, actually, saying that, of course, this is a British issue, but they don't sit comfortably with the fact that British courts have deemed them an unsafe country. Of course, we know that they had significant humanitarian issues a few years ago, but they seem to have cleaned their act up, so they're not happy that they're being thrown in the mud by this policy. But it is a huge issue, and I think, you know, wherever you sit on the divisive plan, illegal immigration in this country is unsustainable, which is why Priti Patel, the then Home Secretary, agreed with Boris Johnson, who was then the Prime Minister, that perhaps this, I believe, £150 million scheme was going to be the best deterrence in stopping the boats from coming. So basically what would have happened is, if you had come into the United Kingdom via the Channel, whether it be through a dinghy or in the back of a lorry, you would get here and you would immediately be handed over to Rwandan authorities. charities to start a new life. Now, this caused lots of concern amongst charities and human rights groups who basically said this was a legal way of trafficking people across the world. It's since been to several courts. Of course, this morning the Supreme Court has ruled and upheld the decision from the appeal court that it is indeed unlawful. So this is going to be a major headache for the Prime Minister. Of course, he sacked sensationally the former Home Secretary Suella Braverman on Monday. She released a pretty damning letter yesterday, basically calling the Prime Minister weak, saying that he failed to deliver on his promises. And then, of course, now we have this situation where it appears that Britain is not able to control its own borders, because even though we're no longer a part of the European Union, we are still tied to some of the laws from the European Court of Human Rights. So yes, this is a major headache for the Prime Minister. I've just seen him speaking in the Westminster Palace, looking pretty frazzled. He is typically on top of his brief, but of course lots have been happening in the past couple of hours. There are suggestions that the more senior right-wing members of the Conservative Party are gathering, perhaps to put in some letters of no confidence against the Prime Minister, and Suella Braverman is really pushing for a leadership bid. So it's all going on as it does, starting off with the cabinet reshuffle on Monday, but considering that immigration is such a political issue here in the UK, the fact that Britain, as it stands at the moment, doesn't appear to have full control of its own borders is a significant national security issue. So there are discussions amongst the Conservative Party. So let's just see and hear what the Prime Minister has to say during his televised address, I believe is taking place at 4:30 local time, Will.
We'll definitely just have to wait and see what Prime Minister Rishi Sunak has to say about this judgment by the courts. But we're looking at this week, the UK government says it will increase the price offered to offshore wind farm developers after the total failure of its last auction round, which left the UK's net zero targets in jeopardy. The UK seems to be reigniting its net zero engine. What is to be expected? What's the expected outcome here, Juliana, following this increase?
Yes, a famous phrase again, I'm afraid, Will. We shall have to wait and see. But you're absolutely right. They put out a bid, I believe, earlier this year to try and attract investment into offshore wind farm developers. They were offering at the time, they were offering developers £40 to £45 per megawatt hour. At the time, I believe leaders wrote to the then Business Secretary, Grant Shapps, saying it was way too low, and because of the cost of living crisis, high inflation, high interest rates, it was going to be impossible to match that bid. They put the auction up, not one single bidder, so they've gone back to the drawing room and they've now increased the offer for developers substantially, nearly by 50% to £70 to £75 per megawatt hour. And as you said, this is all part of a much wider net zero strategy that the British government are trying to achieve. They want to ensure that they are energy secure, and by doing this they want to develop more offshore wind power to generate electricity across the country. So they are now offering it at a much higher rate. So let's see if they get the bids, because it pretty embarrassing last time not to get a single bid, but the fact that they've offered the support up by nearly 50%, there should be some interest, we think, from investors across the world.
Oh, just wait and see, as you say, Juliana. But coming off our conversation with Laddie earlier today, we did get that big drop in UK inflation data, and that's the biggest since 1992, dropping to 4.6%. We'd like to get a sense of how the markets have been reacting to this, Juliana.
Yes, yeah. So not since 1992, but definitely in 2 years, which was quite staggering, actually. So we got inflation data, as you quite rightly said, this morning from the Office for National Statistics, looking at CPI in the month of October, a huge drop from 6.7% in September to 4.6%. Now, the Rishi Sunak is having a very bizarre day because, of course, at the beginning of the day, he was very pleased because one of the 5 pledges, as long as stopping the boats, was halving inflation. And by doing that, at the time, I believe it was about 11%. So he had to get down to 5.3%. It's now at 4.6%. A huge sigh of relief for him. Still way above what the benchmark is at the Bank of England at 2%. But certainly we have seen shockwaves through the UK blue chip index. I think leading the rise on the all-share is house builders, retailers, property firms, all of them in tip-top shape because of this much lower CPI data. So let's have a closer look at the numbers. The all-share is up 0.96% at intraday. The FTSE 100, that's up by 0.83%. The FTSE 250 up by triple-digit figures at 1.24%. In the currencies market, the British pound, because of the flight in the UK blue chip index, is down. It's trading down against the US dollar by nearly 0.25%. It's also down, the British pound, against the euro by 0.06% and down against the Japanese yen by 0.28% at intraday.
Happy day for the markets, Juliana. Thank you so much for the update. Now we go over to the EU, where the EU is expected to present proposals for a new round of sanctions against Russia, which has been circumventing the US-led $60 price cap on Russian oil exports. Joining us with more is Deutsche Welle's correspondent Chipunda Chimbelu in Berlin. Chipunda, what can we expect from the EU defense ministers?
Will, thanks for having me. Well, it's worth noting that any sanctions package from the EU would be the 12th round of sanctions. And we already know that Russia is the most sanctioned country in the world. But before any further package of sanctions can take effect, it will need to be approved by all of the 27 EU member states. So that could take a bit of time. Well, however, the European lawmakers recently backed a resolution calling for better EU oversight on Russia's ability to circumvent sanctions. And the resolution also calls for the bloc to work with the G7 group of nations to lower the price cap on Russian oil and petroleum products significantly from the current $60. EU lawmakers also want a total ban on Russian gas exports and any other products that use it from other countries.
Now, could a tougher Western stance help tackle Russian sanctions evasion?
Well, before we take a look at that, we should try to get an understanding of what has been happening on the oil market. Last month, Russian oil exports fell nearly 2.5% on the month, according to data released by the International Energy Agency on Tuesday. And in terms of revenue, that means that the Kremlin received around $500 million less for its crude and petroleum product exports. And those fell to $18.34 billion last month. Lower oil prices narrowed the discount on Russian crude exports and made them less attractive. So sanctions have already been making Russian oil less appealing because, of course, they mean no insurance and, of course, shipping costs are much higher. That's mainly because, of course, of the longer journey and other factors linked to evading sanctions. Doubling down and coming up with tougher and more restrictive sanctions could very well help nations, Western nations, curb the Kremlin's ability to raise money for its war chest. And while they may not entirely stop Russia from circumventing sanctions, they could very well make the cost of shipping Russian crude and petroleum products so expensive that it is hardly worth the risk legally and financially.
Now, turning to the markets, Chip, what can we expect today?
Well, European stocks are expected to trade higher today as the latest U.S. inflation data continues to fuel optimism on the markets. Investors see the drop in U.S. inflation in October as a signal of an end to Fed rate hikes. And today, they will be, of course, keeping an eye on developments in California, where U.S. President Joe Biden is meeting Chinese President Xi Jinping. Any sign that the frosty relations between the two countries are thawing is something that would bring even more cheer to the markets. In terms of data, they will be looking at US retail sales for last month. And here in Germany, energy is the focus. The government has had to step in with a 15 billion euro rescue package to help Siemens Energy. Now, that's a spin-off of industrial giant Siemens, and they're helping it cope with massive losses in its wind unit. So that stock will be on traders' radars today.
Thank you so much, Chiponda Chimbelu, Deutsche Welle's correspondent there in Berlin with the updates. Now we move over to the U.S., where stock futures ticked higher in early trade today. Futures tied to the S&P 500 rose 0.37%. Dow Jones Industrial Average futures climbed 0.26%, while the Nasdaq 100 futures advanced 0.54%. Now, late Tuesday, the House of Representatives passed a bill to avert a government shutdown. The measure will go to the Senate for a vote, and if cleared by lawmakers, the legislation goes to the President Joe Biden. Without a funding bill, the federal government is slated to shut down at 11:59 p.m. Eastern Time on Friday. But before then, let's check out yesterday's performance with Maria Bird.
The U.S. stock market soared on Tuesday as the Treasury yields took a major dip, some of the lowest we've seen in almost 30 years. Many investors, though, are hopeful about the U.S. stock market as they've seen some major growth. The Dow Jones was up on Tuesday at 1.4%, the S&P 500 up at 1.9%, and the heavy tech Nasdaq took a major up at 2.4%. Investors are also excited to see that inflation has begun to slow its pace. The consumer prices for the month of October were unchanged. This is the first that we've seen in many months and first since 2021. Investors are watching to see how the next few days will pan out to end the week.
Thanks, Maria. Now, oil prices, we'll see how the oil markets performed. Oil prices rose in early Asian trade on Wednesday on Middle East tensions and a weaker dollar, while investors focused on inventory data after a 2-week delay in reporting. Brent futures rose 8 cents to $82.55 a barrel, while U.S. West Texas Intermediate crude rose 2 cents to $78.28 a barrel. The U.S. Energy Information Administration, EIA, will release its first oil inventory report in 2 weeks on Wednesday, that's today. And for the week ended November the 10th, analysts forecast energy firms added about 1.8 million barrels of crude into U.S. stockpiles. That's on Tuesday. Now, the International Energy Agency, IEA, boosted its demand growth, the growth forecast, although its 2024 outlook remains much lower than that of producer group OPEC. Next, the South African economy added more jobs in the third quarter. That conversation next. Stay with us. This is Business Incorporated. Thanks for staying with us. Now, the number of people with jobs in South Africa surpassed the pre-COVID level in the third quarter of this year to hit its highest since 2019, as Statistics Agency data showed yesterday. Now, meanwhile, the official unemployment rate fell to 31.9% from 32.6% in the second quarter, but it remains among the highest in the world, exceeding predictions by labor analysts and economists. And speaking of economists, independent economist Professor Banke Dumisa says he's encouraged by the number. However, he added that more still needs to be done to reduce the unemployment rate in the country. Professor Dumisa was speaking to Channels Television earlier today. Take a listen.
I am encouraged by those figures. Interestingly enough, I had to deal with this matter on different platforms, and people were challenging me and saying, but what is there to celebrate when the unemployment figures are still very high? And I had to say to them, you have to look at the big picture. When we had the COVID, which was totally unexpected in 2020, it was as if the world was coming to an end, and everything literally went down. And we were not sure how long it was going to take us to come out of that. And then last year, we started seeing some offshoots saying, okay, things are getting better, but we thought we were still far from there. Now, this is one major significant pointer that, yes, things are improving.
Now, joining us is our South Africa correspondent, Inocent Samosa, to discuss this outcome or this new development. Samosa, it's good to have you on the program. Now, were there any shifts, Samosa, in the types of jobs, I'm curious to know, or employment contracts that contributed to the overall increase in employment?
Well, a very good afternoon to you, Will, and our viewers around the world. It's good to be in your company. Indeed, South Africa has added some new 4,000 jobs. This, of course, comes at the back of quarter 3 of 2023. And of course, this could very well be, that some 60.7 million people are now employed in South Africa. As you rightly alluded in your intro, this, of course, surpasses the pre-COVID-19 mark of 16.4 million people. Now, going back to your question, Will, we understand that finance as well as community and social services sector are amongst the contributors to job creation. That's hence we're seeing this uptick in terms of employment. But of course, Will, going back to the unemployment dipping below 32% since 2020. From where I'm sitting, I would like to really share the sentiments of Professor Bonke there, because this really does look like an improvement. But I guess the economy would do better if they deal with the challenges that are still facing the economy. For an example, the issues around ailing infrastructure, the issues around the availability of electricity. So if government can sort those things out, I guess maybe would get a growth of more, above 2%. If those things are fixed, maybe perhaps by 2024. If those things are gotten into perspective, Will.
So you can say that the third quarter employment data can be attributed to temporary, would you say temporary factors, or does it indicate sustained economic recovery here, Samosa?
Well, I guess, Will, this shows that there has been improvement from government to essentially create a conducive environment for private sector to essentially, contribute. For an example, majority of the jobs really come from the private sector. Hence, I'm saying that perhaps we should give credit where it's due. Government tried with its policies to really create that conducive environment for private sector to essentially contribute. But I guess also it's time for confusion, if you like, because everybody wants to take credit for this uptick. It's not really a huge margin, but it is an improvement in a way, to step in the right direction. We heard from the Premier of Western Cape and Cape Town, Ellen Windy, claiming that a chunk of that number was the highest number comes from the Western Cape. But I don't know what margins he used or what formula he used to basically arrive to that conclusion. But also, you would know, Will, that we're moving closer to 2024 elections. I guess perhaps this is part of, electioneering. Politicians will ride in anything that is doing, anything that is going well in the country, so that they perhaps garner more votes. But again, I guess government really tried to really create a conducive environment for private sector to contribute well.
We do hope the government continues to create this enabling environment so jobs can be created and businesses continue to thrive. Thank you so much, Inocent Samosa, our correspondent in Johannesburg, South Africa. Thanks for your thoughts this afternoon.
Thank you, colleagues.
Now we move on to Kenya, where the Energy and Petroleum Regulatory Authority, EPRA, is set to announce new fuel prices, with Kenyans expecting higher costs. The announcement will come even as the government warns that a litre of super petrol could breach 300 shillings amid the ongoing conflict between Israel and Hamas in Gaza. Last month, the Energy and Petroleum Regulatory Authority, EPRA, revised the price of petrol by 5.72 shillings, diesel by 4.48 shillings, and kerosene by 2.45 shillings. Now to Nigeria, where the headline inflation rate has increased to 27.33%, marking an increase from the September 2023 rate of 26.72%. The October 2023 headline inflation rate represents a 0.61% increase compared to the figure for the previous month of September. The food inflation rate in October was 31.52%. That's on a year-on-year basis. It was higher compared to the rate recorded in October 2022. Now, the rise in food inflation on a year-on-year basis was also caused by increases in prices of bread and cereals, oil and fat, and others. Core inflation, which excludes the prices of volatile agricultural produces and energy, stood at 22.58% in October, an increase of 5.12% when compared to the 17.46% recorded in October 2022. And that's it on Business Incorporated. To join us tomorrow for another edition. I am Will Ibang. Thanks for watching.